Welcome to the UTI Swatantra series powered by ET Now. I'm Faye D'Souza. Thank you so much for tuning in. This is an ongoing investor education initiative. This week we're talking about your rights as an investor. We're focusing on investor rights. As always, there's an audience in the studio who have questions for our experts, and I'll do a quick round of introduction. Joining me in the studio, S.L. Pandeyan. He's the head legal, internal audit and operating risk management at UTI AMC. And V. Ramesh is a managing director and CEO of MF Utilities India. Gentlemen, thank you so much for coming in. Obviously, we've come across various investors who write to us on a regular basis saying that they're having one or the other problem with their mutual funds. But I want to start at the first step, which is the information. And there are various sources now available on the internet of information if I'm an investor. But is there one source where I can go in and find all the information I need about my mutual fund, about the investment, about my AMC, about the charges that I'm being charged, for example? Is there one source available that you would recommend?
Technically speaking, there is no one source per se for every information as of now. However, from the industry side, there is an initiative which they have started to try and create one source where one access for the customers, etc., which is MF Utility. Besides internet, as it's an ocean in any case, everyone can reach out to so many places to get all kind of information. And also every AMC has their own website giving complete information about every product, its performance, what is the expenses that has happened in the system, what is the return that has come, all kinds of things. So in my view, if one is going to go on the net, people getting information are at various places. Telling one place you will get is a little superfluous in my view.
Okay. Mr. Pandeyan, tell me this. I remember, in school when we studied about fundamental rights, we also studied about our fundamental duties. Yes. And the two always go hand in hand. Yes. So if as an investor, I demand certain rights from the manufacturer of the product, the regulator of the product, there are also certain duties for me as an investor before and when I make that investment. Yes. What according to you are the basic duties an average investor must perform?
Basics are two duties are there. First and foremost, he should comply with the know your client requirements. That is very simple. That is the short form. It is the KYC. It is across the financial sector. It is required. Whether you go to a bank, whether you go to insurance, whether you go to a mutual fund or stockbroker, this is common. And SEBI has come out with a wonderful idea of common KYC across all entities registered under SEBI.
Yes.
It includes stockbrokers. It includes depositories. It includes mutual funds, PMS, all the people are included. All that they have to do is four simple things. KYC compliance is very four basic things. Your photograph is required, your address proof is required,
sure,
your ID proof is required, maybe PAN card, maybe some other, if it is below 50,000, some other card can be used. Apart from that, there is a in-person verification by the intermediary. That is, in case of mutual fund, one of the mutual fund distributor can do that. And in case of direct investment, the respective mutual funds officers can do that, or a bank manager also can do that. So these are the four requirements: photograph, ID proof, address proof, and in-person verification. And there is also electronic KYC, e-KYC, short form, that can be done through the Aadhaar. There is the authorization program of Aadhaar. Aadhaar has these four parameters. Once a person is more than 50% of Indians today have an Aadhaar card. And once they have the Aadhaar, and if they authorize,
so that's the KYC.
It's a very simple
after KYC.
That is one of the important. The second one is that you have to have a bank account and provide the bank details. These are the two basic duties or obligations for a customer or of a mutual fund to provide to the asset managers or the.
What about reading the offer document carefully?
I'll come to that. That obligation. This is the obligation towards the nation, KYC, as well as providing a bank details for the safety and security. This is for your own safety. Basically, it is a sort of rights. If I have to say the same question, what you asked as a duty of reading offer document, it is a right. Suppose it's a new investor versus existing investor, if you have to be categorized. For a new investor, he has a right to collect an offer document. The offer document is now mutual funds are providing in two parts. One is SID, that is Scheme Information Document. The other portion is SAI, that is Statement of Additional Information.
Okay.
So these two put together, it is called as offer documents.
Okay.
Then for a newcomer or novice, you will not be in a position to read 80 pages and make out. So
Printed
there is
very small,
very
if I
small
remember.
information is there, that is KIM.
Okay.
Not more than 7-8 pages.
Okay.
Key information memorandum. So to start with, is there rather right to ask the application?
I'm going to come back to grievance redressal in a little bit, but I first want to work in some questions from our audience. The gentleman at the back had a question.
Why do you think that mutual fund will be a better avenue for the us to rather than an equity market, direct equity market?
Mutual fund has a product for every kind of investors. The question is, which one do you choose? I think that is where somewhere people often, I won't say go wrong, but they miss out selecting the right one according to what they wanted. What mutual fund typically helps you is to avoid spending your time in monitoring and following your investment regularly, so that you want to churn it off and on, which is essential in a capital market typically. But there again, it's question of long term market. If what you do in a capital market, typically if you buy an extremely good brand, established company, you invest for a long term. Similarly, in a mutual fund, if you see the equity product, diversified equity product, if you invest, just leave it for a long term and do it. At the same time, there are a lot of people who invest in sector funds. A sector fund is where the money is invested in that sector. For example, a banking sector fund will invest only in bank shares, and if you invest in that, you need to continuously monitor and be on them. But if you go to a diversified fund, you don't need to do that. If people who are not so much into capital market, not understanding the shares and markets, etc., you should typically go only for diversified products from a mutual fund.
There are charges involved in mutual fund. What is the transparency levels there? Now, we do know that there's a cap on it, and it can't be more than 2.5%. And we also know that all funds declare what that charge is going to be. But can we know what that 2.5% per se is being spent on? Is there a breakup that's available anywhere?
Yes. If you see the scheme information document, and it says that what is the estimated expenditure on marketing expenditure, other operational expenditure, custodial expenditure, registrar and transfer agent expenses. This breakup is also given. The broad categories of 3-4 categories are given, and upper limit is at 2.5. But most of the funds, they don't spend 2.5. It's as low as some of the funds, only 50 basis points, 75 basis point, 1.25, 1.8, right? Different actual expenditure, and this is also disclosed in terms of every half year there is published in the newspapers. All the portfolios are published. That point in time, the expenditure ratio is also published. And similarly, what you was referring the fact sheet, that what were the expenditure ratios published.
So this 2.5% that we know that is the
cap
expense.
for
It's a cap.
annualized.
So let's assume I've invested in a fund that has a 2% charge or a 2% expense ratio. In that 1 year, if I've invested 100 rupees for a whole year, how is 2% then calculated? At what point does it get deducted from my NAV?
This every day for the assets, total assets, on that whatever that actual expenditure is there, that gets cumulated over a period of time. It becomes the 2 rupees on 100. Otherwise, on a day-to-day basis, actual expenditure is being deducted. What is incurred only is will be deducted. It is not what is finally arrived at 1.89, whatever disclosed. It is the average expenditure over a period of time.
So that is the one cost, and there is a one buying selling cost.
There is no buying.
The brokerage also is included.
It includes the buying.
This is the 2.5 cap is included, but only one small addition is there now. If it is beyond beyond 15 cities, then there is an additional 30 bips is permitted, subject to certain conditions, meeting certain conditions.
Also, and also there is now the question of service tax. Who's going to? You want to answer that question? Who's going to bear the service tax? Is it going to be the distributor or the customer?
Yeah, see, there's still no clarity, but there are different schools of thought on this front. The question is, service tax is typically paid by the person who is receiving service, right? Across everywhere, that is the point. In the mutual fund case, there is one school of thought which believes that it is investor who is receiving service from the distributor, so it has to be on investor who's doing it. There is other school of thought is saying that since the asset management companies are paying commission to them, and therefore they are servicing asset management company, and therefore they have to bear it. Okay, so there are different school of thought. I think there is no agreement as of now, but we are trying to see how we will come into an agreement on this.
All right, on that note, it's time for us to take a very quick break. We'll come back and talk more about your rights as an investor. Don't go anywhere. Welcome back. You're watching the UTI Swatantra series powered by ET Now. Thank you for staying with us. We're talking about investor rights and we have questions from our audience members. The gentleman in the front, go ahead.
What I would like to know is when you talk about long-term investment, keeping the goals in mind, because my goal is that I want to create fund for my children's education. When you withdraw or when you redeem that, would there be an exit load? That is one. Two, I want to know a little bit more about the MF utility. How can me as an investor take the benefit of it?
The first question first. Investment for a long term. Long term has different definitions today, right? 1 year is thought as long term. But in this aspect, I don't think it's a long term. Long term will be 5, 10, 12 years. And as you rightly said, children's education is one aspect where the long term can be 17, 18 years or 15 years or so. And in my view, for children's education or any other goal for a marriage, daughter's marriage, etc., if you want to put it, you should plan that and start over a long period. And if you get some increment, etc., you can top it up with additional SIP. So systematic investment plans give you a strong base for a growth. On your second question, on MF utility, which is created by the industry, all mutual funds have together created, especially for the convenience of the investors and the distributors. So here what we have created is, we found the biggest problem that customers have is that every time they go to a new mutual fund company, they have to open an account and there is a folio number, and if you are in 10 AMCs, you have got 10 folio numbers with you. Therefore, we said we need to consolidate that, and therefore we came out with what we call a common account number, CAN. So an investor opens a common account number, all your existing folio gets mapped here. Through the common account number, you will be able to manage all the accounts that you have opened or you want to open in future also. In future, if you want to invest in a new mutual fund company, you don't need to open a different account, refer this CAN and start investing in that. That is one of the biggest benefit that we see you can invest. The second important benefit is that with one form, you can have multiple schemes and multiple AMCs schemes in that form with a single check. You will be able to invest.
All right, there was one more question about exit load, which there isn't any.
Yes,
So
about exit load. For a long term investment, generally mutual fund do not charge exit load. Okay, exit load is there for the short, just to avoid a churning of the portfolio. Most of the scheme have. So in your objective is the long term. Generally it is not there.
So after 1 year, there's
Normally
normally
1 year.
one
Different
year.
dates, different schemes. Somewhere it is 90 days, 180 days. Like that, different people have a one year,
So
one
you
and a
should
half years.
be
Like
be
this.
mindful of that while you're
You-
making the investment.
It
Make
is
a point of
disclosed
that.
very clearly that what is whenever your fact sheet as well as KIM, you can see this very
On
clearly.
an average, what is the exit load though in that 90 days or 180 days?
See these depending on the schemes, it can be say 50 bips, 75 bips, 1%.
Sure, go ahead.
Yes. So it is very interesting to hear about the CAN coming in, which will simplify the life of the investors. My question was around the same thing of so much of mis-selling we have been hearing about. To simplify that and to put an end to that, why don't we have a checklist which is maybe a 5-point or a 6-point, given with every scheme whichever you purchase, that have you checked this? Because every investor is not a literate investor, let's say. So he should at least, I'm saying, I heard that there is KIM, there is SIT, there is CAF, there is offer document. A common man does not know any of these. So why does it not become a mandatory common thing across all companies when you buy or invest in a scheme, that these are the 5 things, have you checked or not? Whichever 5 or 6 things it could be. My question is around saying how can we get more safety from the AMC of what I'm signing is good or bad, because I cannot read all the offer documents and everything and make a comparison myself. I'm not the expert. So I'm trusting somebody to give me that. So that's all I want to say.
See, there are 2 or 3 things which one investor can do that. First and foremost, you should have a dependable investment advisor. The person whom you are going to say independent financial advisor, whether you have to see that whether he has a AMFI registration number, whether what is his standing, and what is his reputation, what are the other clients, suppose your friends or relatives have invested through that advisor, you should ask what is their credentials, first thing, because he is your friend and guide philosopher. First one, that is a basic check for you don't want to do so many things. Second one is look for the fact sheet. The fact sheet will tell that if you have invested 10,000 rupees and how much it would have become, and over a period of 1 year, over a period of 3 years, or over a period of 5 years, and since inception, all these returns are mentioned there. So this is the second simple thing. It's a one pager. It is not a multiple page, and it's a very simple English. It is written there, and there are some people who are given in the other language also, like Hindi and other things. Second thing. The third one is that now very recently, earlier that all the schemes were categorized into high risk, low risk, medium risk. Now that has been further simplified as a riskometer. It is a low risk, whether high risk, whether moderate, and between low and high, between low and moderate, moderately low, between moderate and high, moderately high. So this is a riskometer, like your speedometer. This riskometer is there. This is also printed everywhere. The over and above the distributors, in order to check the distributors, there is also SEBI has also introduced additional checks. Employees unique identification number. There are certain large distributors. They will be employing hundreds of employees. So each employee is assigned a employee's unique identification number. Unless he should also have a certified as a AMFI certification. He should have that. So all these registrations are there in place or not. This basic check you can do that. Sure. So then it will be helpful for a new investor easily to tackle without seeing reading so many pages. Then you can depend on these people and these documents.
All right, it's time for us to take another very quick break. But when we come back, we'll talk about consumer grievance redressal and who you can go to if you're having a problem. Don't go anywhere. Welcome back. You're watching the UTI Swatantra series powered by ET Now. Thank you for staying with us. We're talking about investor rights and what you should have as rights and what your expectations should be as an investor. I want to very quickly ask you about this. We talked about what my duties are as an investor, yes, what rights I have as a first-time investor. What are my rights as an existing investor in terms of account statements, in terms of hearing from my, from the company I have invested in on a regular basis? What should I expect, or what are my rights as an investor?
See, the mutual fund companies or asset management companies are obligated to give to the customers, existing customers, or once you are become a customer, many things. To start with, once you are investing within 5 business days, you must get an SMS or email about the allotment of units, at what rate, how many units have been allotted out of the money you have invested. So this is 5 business days maximum, and followed by the statement of account. It can come through electronic form if you have given an email, otherwise physical form. This is one. Second thing is that on a month-on-month basis, there is a consolidated account statement that is across the mutual funds, including your equities and all the demat accounts together. SEBI has mandated all the AMCs together to issue one consolidated account statement where you have transacted all the transactions of the previous month has to be dispatched by 10th of the following. Suppose you have made 5 transactions, all the 5 transactions, whether they are forming part of that or not, you can see. Over and above, this valuation, your total holdings, all those things are valuations of your equities holding, your mutual fund holding, your debenture, all those things come. This is the second item on a month-on-month basis. And then every year, once in a year, whatever schemes you have invested, abridged annual accounts. So it will give you the entire portfolio annual report in a short form, printed and posted to you if it is electronic form is not there. Otherwise, if you have provided your email, it will come through electronic.
You have a question at the back. Go ahead.
I have already one pension plan, which I plan for my entire life. But right now I'm thinking that can there is any kind of plan is there where then people can switch industry wise. There is some sectoral funds are available in the market. So can you suggest as an investor in upcoming 20 or 30 years, what kind of industries are very good to invest for 20 to 30 years?
Moving from sector to sector, there are no funds because it's all dependable. You cannot predict about any sector at all because like pager came in within no time, mobile came in, pager was out of the system within no time, right? Like that, every sector can have problems based on the usage, customer behavior, and also based on the government policies. Lot of things can happen. Therefore, sector planning is not there. However, there are asset allocation funds are there, where certain type of asset is allocated into equity, debt, etc., etc. That plan is already given to you, what kind of movement they do. There is also something called dynamic funds, where when equity market is good, they get into equity, and then if it's not so good or bad, they find something, they move to debt. When debt is not bad, maybe move to gilt. Those kind of planning schemes are there. So, in my view, you should look at these instead of getting into sector fund. Sector fund is absolutely more and more for educated, known investor, or if you have a good advisor who can advise you at the right time to move out or come in, then that is fine.
Okay, I'm going to take a question from the side.
I have not invested in mutual funds so far, but getting inspired by today's episode, I would like to invest in mutual fund. But what are the key factor or the basic thing as a fresh or the new investor we need to keep in mind, sir?
Two things. First, what are you investing for? Do you have a goal? Like you mentioned, children's education or something like that. Do you have a goal? In that case, you should look at that kind of a long-term investment, or are you looking at a short-term one? There are two ways of investing it. One is to, depending on your profile, are you looking for a regular income at a particular time, or are you in a stage where you can take higher risk? If you can take a higher risk, you can look at equity. If you take moderate risk, you can look at debt products or balance fund. Balance fund is where 65% is equity and 35% is debt products, debentures and other things, or you can look at various other products. Typically, in a equity fund, it is always better that lump sum investment is not really generally advised, and therefore we say SIP, systematic investment plan.
If you were to give him just a checklist of things to do, so you said, of course, one, be mindful of your goal and your time horizon.
That's precisely it.
Yeah. Secondly, the asset allocation that he's going for.
The third is, you can look at a diversified fund, and assuming you have, like say 5 lakh rupees to invest, even that you don't time it and invest it now, you can put it in what we call a liquid fund, where it is much safer, the risk is extremely low, and do what we call a systematic transfer plan into the equity fund over a period. Therefore, you buy at different level, your cost is under control, and then doing it. So, in my view, if you have a lump sum fund, you should look at STP and transfer into a good diversified fund. If you still want to invest lump sum, you should look at a diversified fund long term, and if your profile is not so great, you should look at a balance fund or a debt fund to invest.
Sure,
My
go
name is
ahead.
Shintan Shah. I want to know about the direct and regular fund. The returns changes comparing to this?
So that's interesting. So if I mean, one thing is you're bypassing the mediator, so it'll add to my returns, but I'm also making do without the advice, right?
See, here it's a call, how far you are financially literate. That is the first step you have to do that. Whether you require advice, or like he was saying that I do a lot of capital market activities, I am quite comfortable. Then for those set of investors who can take their own decisions based on that available information, they can go for a direct plan. And those who want to say, like he is saying that I am interested now based on hearing, then for such people it is always better to go with the advisor. And the difference is only they say that whatever total expenditure 2.5, out of that the distribution related expenditure only makes the difference. So it is not going to be a very significant expense for this.
If it is a long term, it's definitely going to affect.
So if you are, it's a call you have to take. Suppose if you are, as someone else was also saying, that I have to time some certain times when to move from one sector to other, or when I have to redeem, when I have to go to a liquid plan from one asset to other. If you have an advisor, you can do that. You can depend on that advisor. If you are comfortable yourself, you have to. You should have the knowledge and time both. Then you can go for a direct. So it's a purely your call. It is not only on that small portion of that distribution cost.
All right, so that unfortunately brings us to the end of this show. That's a wrap on this particular episode of the UTI Swatantra series. Gentlemen, thank you very much for spending time in the studio answering our questions. You've been a wonderful audience as well. Remember, if you'd like to join us in the studio, just log on to our website, indiainvestguru.com, or leave us a question on Twitter, #InvestGuru. It'll be our pleasure to hear from you. Thanks for watching.
brought to you by UTI Mutual Fund. हक एक बेहतर जिंदगी का.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.